Matt Chambers, iron ore has gone down below 70 for the first time in 5 years. Are we still seeing more selling pressure on the commodity?
Yeah, well, it looks like we are. There's still more supply coming on BHP and Rio. There's also costs are coming down. Ore prices are helping the miners in that respect, but they're also prices are looking for a point where they'll hit a low enough that supply will start coming out. But if costs go down, that price point gets lower.
And so is this a case where the iron ore price is dropping because of that supply? Is it following the oil price down as well?
It's more the supply. I mean, it's been bumping around these levels for a couple of months now. So it was ahead of the oil price. There's also a bit of a lag on things like diesel. I think Australian diesel prices are down about 20%. Brazilian diesel prices apparently haven't changed much. So as those sort of the low cost of oil works its way through the refineries, that's got to help the miners' costs.
So you do think though that it's possible that we'll see iron ore falling even further?
Yeah, I think so. And Citibank today issued a report where I think its 2015 average was in the 60s, so they're obviously think that it's going to be lower this year.
So what does that mean for some of the more expensive producers?
On the face of it, it looks bad, but I guess on the good side, the positives, if they can cut costs, which is what they're all doing, that they may be able to keep their margins. Fortescue will come out with its quarterly, I think in the next couple of weeks, and they always put their cash costs. So people will be watching closely to see if how much they've been able to squeeze their costs and maintain their margins.
And you talked about oil in terms of an input cost for the producers, but also it has a big impact on actually shipping iron ore too, right?
Yeah, that's right. This is one of the big changes in the market that's happened recently that people have been starting to pick up on. Traditionally, BHP and Rio are the lowest cost producers into China, but they're not the lowest cost producers out of the ground. That's in Brazil. What affects Brazil negatively is the huge freight costs that they've got to do to get across there. But the fall in oil prices has almost directly been passed on to shipping fuel. And what we've seen in the last 6 months is a halving of fuel costs, which has really reduced freight costs from Brazil and from Australia, but because it's so much further to Brazil, the benefits are all Brazil. So now we're seeing reports that Brazil is actually, and the Vale is the big producer there, is actually matching Rio and BHP into China. So they're the cheapest three. That probably is a bit of bad news for Fortescue. Fortescue late last year put up a chart saying its costs into China were about the same as Vale, but that looks like Vale has an advantage now. And what BHP was saying towards the end of last year was they think that with all the extra cheap supply that BHP and Rio are putting onto the market, it's going to be Vale or Fortescue who are going to have to pull some of their higher cost production to bring the market back into balance. So if Vale's got the jump on Fortescue on costs into China, it's Fortescue's going to be the one feeling that pressure.
Now that cutting production is really the big issue, and it's something we've been looking at in terms of OPEC not cutting their production of oil. So how much pressure do you think there is right now on the boards of BHP, Rio and Fortescue?
No pressure on BHP. Oh, you meant to cut production? None on BHP and Rio because they're so low cost and their margins are so strong, and their expansions are taking advantage of infrastructure they've already built, that it's just makes economic sense to keep on ploughing it in. Well, there's some argument about that, but that's the view the boards are taking. Fortescue, less clear cut, and again, when we see what's happened on the cost front, we might get a clearer picture of what they're going to do. But I mean, certainly some of their mines, their earlier mines, are a bit more high cost than the more recent ones they've built. So there may be pressure to rein those in.
Matt Chambers, thanks very much.
Thanks, Jackson.